following is an update and technical analysis on crude oil West Texas Intermediate futures here off the daily interval in what I now believe to be a significant amount of uncertainty and unclear, hazy direction ahead here for the crude oil markets, with the weakening performance of major economies such as Japan's shrinking factory activity data, decreased business activity within the Eurozone, and the potential economic contraction within Britain has heightened concerns about demand for crude. Even within the U.S., economic growth seems to be hovering close to stagnation within the month of August. And the outlook, what we have now with the Iran nuclear deal, has shifted drastically, going from almost certain in March of 2022 to nearly non-existent by the end of the year, and now falling somewhere in between, right up in the middle, though the possibility of a deal being reached soon seems unlikely. Relations between Washington and Tehran have notably improved, with the Biden administration unfreezing frozen assets and potentially allowing Iran to enrich uranium. And as the president works tirelessly to counteract inflationary pressures within the economy, I would only say the odds are significantly increased for volatility. And here we are. We're dancing around this minor. I've added this minor reactionary downtrend line right off the peak of that trough. And especially if you're an active and or day trader, really to the button, right off on a bid reactionary low off the 236 fibs retracement, coinciding with the 77.84 price support. And that entire trade right out the gate was good for a 3.5% move to the upside, and then slightly had a just a smaller rejection amongst that primary reactionary downtrend line. Bull traders on the long hand side, for swing traders, they want to see a final pop and take that key minor reactionary downtrend line out for a retest of the 82.61 price resistance, and then additionally the 85.72 right up above, correlated with the 382 fibs retracement for a prolonged move to the upside, which would spur additional health back into this moving average convergence on a potential bullish crossover. As far as the bearish case scenario, they want to see a rejection right amongst this key inflection point on a retest from what I believe to be a major turning point of transitioning effects, is the multitude of reactionary highs amongst this major primary reactionary downtrend line. And I believe that is even synchronized and correlated with additionally the 200-day moving average and the 50-day moving average as well. Very significant turning point there. That must be defended by bull traders and or long traders really at all cost, in my opinion. Whereas you have the 50-day moving average puncturing the 200-day moving average there, and a potential golden cross bullish continuation pattern. So significant turning points, whereas we have the stochastics 1033 price support, nice clean price support around that 2402 range, if and when we go back to retest that primary downtrend line correlated with those moving averages of support, which would be additional nice clean technical momentum indicator support right around that transitioning point, where again bull traders, long traders need to step in pretty aggressively right off that key inflection point. I'll hone you into the USO United States fund there here on the hourly, where I had mentioned this had stressed the primary reactionary downtrend line. This minor reactionary downtrend line would be felt, especially with the 73.52 price resistance. I've added some new key additional levels to watch, 74.09 and the 74.75 price support. And that would be an objective short trade entry. What has changed now is we had a clear defense here within the hourly candle closes amongst the 70.88 price support, and that was defended heavily amongst long traders and or bull traders, active traders, right off that key inflection point, where we never had a solid daily candle close below, where additionally you put in at least one out of the three momentum indicators in positive divergent low and a positive bullish divergence here in the oscillator. And again, that's a very bullish sign, whereas you have a peak and a recovery off that key inflection point off the zero line threshold. And again, that is pretty bullish, where we are trading significantly above the 50 hourly moving average and the primary reactionary downtrend line here. And I've added this new 72.69 price resistance. A pretty significant price support resistance comes off right off the gap there. And again, that's a key inflection point bull traders and or long traders need to take out and have a continued move to the downside there. Especially, again, if you're an active and or quick day trader, that entire short trade setup was good for a 4% crash. And then additionally, on a nice clean recovery, right back up to that primary reactionary downtrend line, was good for a 2% move to the upside. So very significant price support. The breakout wasn't as clean as a breakout, but again, a move right up above that 72.69 price support would validate this near-term reactionary high downtrend line breakout, in my opinion, and increase the odds for a much larger move to the upside, re-challenging the 73.52 price support resistance and a potential backfill to the gap, on a complete backfill to the gap to 73.68 and correlated with the 73.52 price resistance. I'll keep you updated if I see any more significance here in the charts, where any key fundamental catalyst could just inflict damage in either direction in an all-out rush for volatility